Good morning, you're watching Business World Live. I'm Jes Delos Santos. It's the start of a new business day, but first, let's go straight to our top story. Remittances recovered in September, growing at the fastest pace in over 2 years, following a decline in August. Cash remittances coursed through banks jumped by 9.3% to $2.6 billion in September. That's from $2.38 billion a year ago, data from the Banco Central showed. The September figure recorded the quickest growth since April 2018. Month-on-month, remittances rose 4.8% from $2.48 billion in August. Security Bank Chief Economist Robert Dan Roses said the deployment of seafarers in recent months had helped in the rebound of remittance inflows. Data from the POEA show that more than 136,000 sea-based OFWs were deployed from July to September after the government launched a green lane for seafarers to help process their departure. RCBC Chief Economist Mike Ricafort said money sent home OFWs in the medical field and other essential industries may have also supported the growth in September. He said a continued pickup in remittances is likely in the next few months or during the Christmas season. Meanwhile, Fitch Solutions says the long-term benefits of the Regional Comprehensive Economic Partnership, or RCEP, will outweigh possible disruptions that less competitive economies might experience. Fitch says the deal, which covers nearly a third of the global economy and population, will improve market access and increase the variety of goods and services to the 15 treaty signatories. Fitch says the agreement will strengthen regional supply chains on the back of factories relocating out of China. But Fitch says that in the Philippines, exporters will continue to be hindered by ease of doing business and persistent logistical issues. It said that while the RCEP provides Manila with greater access to the larger consumer markets of China, Japan, and South Korea, as well as Australia, red tape restrictions are only part of the barriers that businesses face in the Philippines. Fitch said that these issues will hamper the potential to build out a greater manufacturing base in the Philippines. It said the country lags its ASEAN peers in its ability to attract diversifying supply chains away from China. A former ranking official of the United States talks about the timing of the RCEP. Claire Reed speaks on Bloomberg Markets Asia. Let's listen in.
From a practical perspective, it could be very, very helpful for businesses. From a geopolitical perspective, it's of course important when you think about the fact it's the first agreement that Japan has had with China or Korea. It's the first multilateral free trade agreement that China has had, and it obviously, indicates again to the United States that the world is moving on. All of the U.S. trading partners in Asia are moving on to try to create more efficient, productive trade, and the U.S. is not at the table right now.
Claire, does the Trans-Pacific Partnership, I know you alluded to it already, does the TPP come back into play as of January the 20th and the inauguration of a new president there in the U.S.?
Well, I think the attitude to the outside world takes a paradigm shift, so that I think a Biden administration, even with a very strong focus on combating the coronavirus pandemic and really bringing the U.S. back to prosperity, is going to be looking across the globe to its allies and partners and to those who are important competitors like China, to understand how the United States can prosper effectively. There's too many things going on in our globalized economy to think that the United States can actually come back to a robust economic future without thinking about the international dimension. So I would say that it's probably more a kind of weather shift, if you will, an atmospheric shift, at least at the outset, rather than the Biden administration wanting to plunge into doing some kind of very big headline or international trade deal, per se.
Claire, we know your focus is mainly from the US point of view, but I did want to get your thoughts, if we can, on just the fact that India hasn't signed this RCEP deal, but there is this clause in place that they can, if they want to join at a later date. Is this symbolic as we start to see these big relationships occur with big powerhouses outside of the US, the likes of China, perhaps giving a bit of a hand here to India if they do want to join down the track?
Well, I would say that all of the nations in that region of Asia are trying to encourage India to join. And obviously, India is such a huge economic powerhouse in and of itself that it would really enhance the scope and importance of an RCEP if India were to join. But India's concerns relate to the fact that it's really afraid that China will be flooding Indian markets with very cheap goods, and that will be hurting a number of the lower income elements and industries in India. So India is quite skeptical of the desirability of joining. And I think India generally has evinced quite a skepticism towards joining these multilateral deals. So I wouldn't hold my breath on India joining soon.
Claire, also give us a sense of a Biden administration. You know, we've talked around it to some extent, but AK may not join TPP or the CP TPP as well, as it's morphed into, and looking at RCEP as well. Where will Asia be in the list of priorities as trade partners for a new administration?
That's going to be a complex question. I think the United States' sense of its economic future requires it to reach out to allies, both to help structure a sensible economic future with regard to technology, for example, and with regard to national security and economic security. So I think there is going to be outreach to the partners, U.S. partners in Asia, for sure, to try to work out some of these issues. And some of them, of course, relate in a backhanded way to China. So if there is a concern from a national security perspective about Chinese infrastructure, Chinese technology, Chinese state-owned enterprises, a non-market economy that is driving lots of exports onto world markets and hurting market economies in other countries, then there's a need for there to be a lot of work together to do two things. One, to constrain China, and two, to maybe build a safe space for economic growth among reliable trading partners.
Again, here are the biggest stories. GT Capital reports a whopping 94% slump in net income for the third quarter. That's to the tune of 489 million pesos from the 8 billion pesos it reported a year earlier. The conglomerate continued feeling the brunt of the pandemic from July to September, although that net income is already a 147% improvement against its second quarter figures. Year-to-date, revenues are down 46%, while core net income declined 69% and consolidated net income sank 79%. Recall that in August, the government implemented a 2-week strict lockdown to heed the call of healthcare workers for a reprieve. In effect, nearly all of GT Cap's business segments are reporting lower income contributions year-to-date, except for its insurance unit. AXA Life was the sole business to generate profit growth for GT Capital, with net income rising 21% to 2.3 billion pesos. GT Capital President Carmelo Bautista said the 2-week lockdown in August abruptly reversed the early signs of recovery the company saw in July. The Aboitiz Group is set to offer a 7.55 billion peso fixed rate bonds in the coming days. This is part of its 30 billion peso fixed-rate bond offering approved in 2019. The bonds will be issued in two series, namely Series C and D. Series C bonds will have a fixed interest rate of 2.84% per year, maturing in 2023, while Series D bonds will have an annual interest rate of 3.31%, maturing in 2025. The net proceeds of the offering will finance the conglomerate's maturing debt obligations and its hydropowered water treatment plant in Davao. The treatment facility is a joint venture between Aboitiz and JB Angeles Construction, a bulk water infra company in Davao City. Now, Double Dragon hopes to file its application for a 14.7 billion peso REIT offering within the week. The property developer says it already has a pending application to change the corporate name of its subsidiary, DD Meridian Park Development, to DDMP REIT Incorporated. Additionally, the company looks to amend its articles of incorporation to prepare for the REIT IPO. Double Dragon plans to use the proceeds from its planned REIT listing to support its plan to expand its recurring revenue business by adding about 425,000 square meters of floor area to its portfolio. DD is planning REIT offerings every year until 2025 that will involve about 200,000 square meters of leasable assets each year. We'll have more of the news when Business World Live returns. Stay with us. Here are other headlines we're keeping our eyes on. The NDRRMC is urging the president to place the entire Luzon under a state of calamity. This move aims to address the impact of recent typhoons. The NDRRMC also agreed to convene a technical working group of its joint prevention, mitigation, and preparedness clusters to assess the current dam management across the country. Defense Secretary and NDRRMC Chair Delphine Lorenzana, meanwhile, ordered PAG-ASA to strengthen its warning mechanisms for future typhoons by revisiting historical data. Lorenzana expressed earlier that he is satisfied with the Council's preemptive measures, but that's not stopping the Congress from conducting a probe into the matter, including actions taken after the onslaught of Typhoon Ulysses. In particular, House officials want to investigate the circumstances behind the heavy flooding in Cagayan and Isabela to prevent similar situations from happening in the future. While lawmakers are still tackling the 2021 budget, the government's economic team is already studying whether the 4.1 trillion peso spending plan should be augmented to fund rehabilitation efforts from recent typhoons. Finance Secretary Carlos Dominguez explains that they are now evaluating the amount required to address the damage caused by typhoons and determine whether the current budget is sufficient. The economic team is also reassessing the government's macroeconomic assumptions and fiscal program following the deeper than expected contraction of 11.5% in the third quarter. Meanwhile, Socio-Economic Planning Secretary Carl Kendrick Chua expects the typhoon's impact on inflation to be minimal as long as the supply of food continues to flow. DOF Undersecretary and Chief Economist Gil Beltran noted that early rice harvests have limited Ulysses' damage on the agriculture sector, and a price impact can only be expected in vegetables. The APEC is expecting its member economies to post contractions of 2.5% in average due to economic impacts of the pandemic. This is equivalent to around $1.8 trillion worth of lost output. The new forecast is an upgrade from the previous 2.7% estimate. It realized the APEC bloc says will be the first annual contraction among the member economies in 3 decades. APEC economies contracted 3.7% in the first half after growing 3.4% a year last year, due to the lockdowns imposed on both sides of the Pacific. APEC's policy support unit said member economies should be supported by fiscal and monetary policy actions to help bring back confidence and stimulate growth. APEC members are expected to grow 5.2% next year, lower than the earlier projection of 6.3%. Now, with the acceleration of e-commerce and digital payments during the pandemic comes a ballooning of online scams. But one player comes to the market bulletproof, armed with a partnership with a leader in fraud protection. Now, to talk about that, we have Francis Plaza. He is co-founder and CEO of PayMongo. Good morning, Francis. Great to have you with us on the show.
Good morning, Jes. Thank you. It's a pleasure to be here.
All right, so the last time that we talked to PayMongo, we had with us your CEO, Edwin Lacerda, and he did, basically tell us about how PayMongo stands out in a sea of e-wallet payments and digital platforms in the country. But now, maybe we can now move forward the discussion. This time around, you have a new partnership with Vesta. But more to that, what's interesting is that this comes in the heels of, the DTI reporting that online scams are actually up fivefold from just around 2,000 in 2019 to now almost close to 15,000 really from January to October this year. A huge chunk of that, really being comprised of online consumer complaints. But there's also been a surge in phishing and other internet scams. Question is, Francis, how much of a challenge is it really to regulate online commerce and internet activities?
Yes, you're right. So, pre-pandemic, we've seen at least more than double, as you mentioned, in the increase of fraudulent transactions on the internet. Given that a lot of businesses are shifting online, there's basically chaos, and fraudsters are taking advantage of that chaos. And it's fairly difficult to actually regulate that. One, as they say, there are three truths in life: death, taxes, and fraud. And for an online payments player like us, we have to be able to balance between user experience, enabling businesses to actually have a lot of successful transactions, while at the same time preventing fraud. So being able to be proactive, while at the same time still enabling the growth of these businesses is the hard mix that players like us have to deal with on a day-to-day.
Well, PayMongo has always boasted of a robust fraud detection system. Question is, what level of protection were always in place on your platform?
Right. So actually, in the very early days of PayMongo, we've invested heavily in fraud detection technologies, primarily because during the first few weeks of PayMongo, it's actually when we saw our first instances of fraud. So, looking back, it was a blessing in disguise that we opened our eyes to the world of fraud early on. So in the early days, we've invested in machine learning algorithms and fraud detection engines that actually determine tens of thousands of data points in real time for every transaction that goes through the platform. So in real time, we can actually make a decision whether or not that transaction is potentially risky. If there are transactions that we need to examine further, we have a team in the company, a fraud and risk team, that actually goes through them and makes a decision whether or not to push a transaction. Or we could also reach out proactively to our merchants to warn them ahead of time of potentially fraudulent transactions. So one of our value proposition really is we want to remove all the headache of fraud from the merchants, because it's not their core competency, and we want them to focus on doing business.
Now, give us an idea, nuances a bit there, Francis. What were the more common fraudulent activities that you have detected, especially at the onset when you were still trying to establish your platform?
Mm-hmm. Yeah, there are two, I guess, both merchant and consumer side do some kind of fraud. From the consumer side, we see buyers who actually steal credit cards, for example, who give false identities. There are people who try to use somebody else's account and enters a different shipping address, so the merchant would send the item to the wrong address. On the merchant side, we see folks who actually misrepresent their business in order to scam people out. We see folks who try to use the platform to cash money out of a stolen credit card. So there's a lot of permutations, and especially with the rise of online commerce, people have been more creative, and I think it's not going to stop. The role of players like us is to actually build tools that will improve the security for our merchants overall.
And like what you mentioned, there will just be more and more permutations of online fraud schemes in the future, especially with the pandemic dragging on, which leads us to this new development with PayMongo. You are partnering with Vesta. They are a known leader in fintech protection. Why Vesta? How is this going to be beneficial for PayMongo?
Right. So we've established our relationship with Vesta actually a while back, even before the pandemic. So the team at Vesta, very great people. They've been in the industry since, I think, 1995. And they've really specialized in online security and fraud detection. They started out with telecoms, and they've built this years and more than decades worth of data that complements our existing tools. So the way we approach fraud detection in the company is we just build on top and improve on whatever existing platform that we have. So with that relationship that we've built with Vesta over the last year, we were able to find or establish the technology that actually syncs up with their existing fraud data. So now we have a much more robust fraud system, and that will allow us to actually provide more fraud detection products in the future.
Okay, can you give us a more concrete idea here? What products exactly, what upgrades are we expecting from this partnership? And how will this boost the confidence of your merchants and even consumers to actually transact with PayMongo?
Right. So one of the learnings that we learned, especially during the early days, is that fraud and risk is foreign to a lot of businesses, and for good reasons, right? They don't train for it. It's really not their core competence, and they just don't have the time, money, or resource to learn that. So in the early days, even though we had systems in place, a lot of them actually still find it difficult to navigate through all those risk scores and all the warnings. Now we want to grow, and the ultimate goal for us really is to be able to protect every single transaction. So if we say, look, that's safe, we can guarantee it for you. If it's potentially, and if it turns out to be bad, then we take the risk. So that's sort of the goal, and it could take time to get there, but we're building products in between so that we actually, the goal completely in the future is to remove all the friction, and then all merchants that sign up to PayMongo has to, they can't forget about fraud in the future.
Based on your experience, how much of a concern is it still, online fraud? How much of a concern is it for merchants to actually consider actually coming online with PayMongo? Is this still a huge factor for them?
It is, and a lot of people, one of the patterns we see with people onboarding the platform, they try out little by little until they get used to, especially the smaller businesses who've never used online payments before. So they try it out for many different reasons. One is, just to see whether people actually get comfortable paying online. But for other merchants, they actually just want to see whether they actually receive their money in the end. If you're the business, your goal is to get paid at the end of the day. So for them, the worry really is between the time a buyer pays and when they receive the money. So that entire transport layer is when they actually get the most worried about. So that's what we're trying to optimize, that we're trying to solve, and hopefully we can narrow it down and everybody gets more comfortable, which benefits not only us but the entire internet economy, because more and more people will be comfortable online.
Okay, and one other interesting thing here with PayMongo, not to make light of the pandemic, but actually transactions surged 42% in 4 months. We do know as well that it was a jump of 15 times here for PayMongo. Were you able to sustain this as the economy slowly reopened? A lot of traditional brick mortar stores reopening again. Is this level of growth something that you were able to sustain the past months?
Yes. So, traditionally, when people think about things opening up, and especially last night, for example, Moderna announced that their vaccines were getting better, and all of a sudden in the stock market, the work from home stocks dipped, right? Like the likes of Zoom, and that's
Mhm.
interestingly when people assume that when things open up, like everybody would just wants to go out and not do online meetings and all that. We're very bullish about the growth of online and especially online transactions as more people see it as not only convenient but just the way of life, whether or not we're in a lockdown or the economy opens up. So for us, we've seen like continuous growth, and last month was actually another all-time high for us. So we're very bullish, and we hope the pandemic is over, and I think the economy just gets better and online transactions will keep growing.
By last month being an all-time high, can you nuance that a bit for us? Give us some specifics on that one.
Yes, so we've grown at least 20% last month. I can't give the specific volume, but it's a constant growth month over month.
Okay, very quickly now, Francis, how is PayMongo planning to scale? We do know you managed to acquire Series 1 funding worth $12 million. How will this come into play as you roll out new products and features?
Yes, so we're 1% done of what we could do. So there's really like a long list of feature requests and products from our users. So we just want to support overall, like our goal is to enable more businesses. So we want to support more business models, more use cases, from recurring payments to subscriptions to marketplaces. There's just tons of ways we can improve the product, and that's where we want to head. And overall, it's really an infrastructure play. We want to build every Lego pieces that will enable more of these businesses.
Okay, definitely lots of room for PayMongo to actually grow and expand. Thank you very much for your time, Francis Plaza, co-founder and CEO of PayMongo.
Thank you.
And that's a first look into the business day this Tuesday, November 17, 2020. Catch us again tomorrow at 9:30 a.m. I am Jes Delos Santos. We are One News.